What if I told you that there's a way to buy a $400,000 home with only $1,000 out of pocket? A mortgage educator, a separate video, they just recently showed how to do that with an FHA loan, a down payment assistance program, and seller credits. It's a clever strategy. But if you're military, you may not need any of that. And by the time I'm done showing you the long term costs that most videos skip, you're going to be glad that you watched this first. So I got a question from a viewer, and he says, I'll read it here. Hey, Weldon, I'm an E5 at Fort Benning. My wife and I, we're looking at our first home. We only have about $8,000 saved. I keep seeing videos about down payment assistance programs. Should we be looking at that instead of VA? Fantastic question. I love it. Because when you're looking at your bank account and someone shows you a way to get into a house with almost nothing out of pocket, that feels like the move. But here's the thing. The question isn't, how do I minimize cash to close? The question is, what position does this put me in at my next duty station? What position does this put me in today? That is a wealth move. So that's why we ask those things first, and why we're going to break down the FHA plus down payment assistance strategy and give it full credit for what it does well. But when you show why a VA loan that can keep you in a stronger position, well, the answer is going to reveal itself. So stick around for the long-term math. This is where the military families, where you usually win. Now, if anything I'm saying is starting to make your head hurt, don't click off just yet. Know that in the caption right below here, you can click on something called start.askweldonhobbs.com, and that's going to take you to a list of transitions that we all go through as people, as human beings. Click on one of those tiles, and in this case, if you're thinking about a PCS, click on that, and it'll ask you the questions, 8 to 10 of them, and once you have that, it'll help you understand the decisions that are in front of you, and if you'd like to go over it with me, I'm happy to do that, and then we can unpack where you're at, connect you to the values aligned agent wherever you're moving to across the country, and lenders as well. So if you haven't already, hit subscribe. I put this kind of content out all of the time. I love walking along next to other people trying to make these decisions and just being that guide so that way you can make the best decision for you and your situation. Okay, let's give this strategy its due and dive into it, because here's how it actually works. You take an FHA loan, which that usually requires 3.5% down. And so if you apply that to a $400,000 home, that's $14,000. But then you stack a down payment assistance program on top of it. So a second loan that covers that $14,000. Then you negotiate seller credits to cover most of your closing costs and add in your escrow funding. And the mortgage educator, what he ended up showing here was that you can get into that house with only $1,000. That's great. It's clever. And for a civilian buyer with limited options, it might make sense. But here's what they didn't show you. The hidden cost, and this is number one, of a free down payment assistance program. That $14,000 usually isn't a gift. It's often a second lien on your house. And here's the key. Down payment assistance, those terms, they vary, and they vary significantly. So some programs, they're deferred costs, and then some are forgivable. Some are fully amortized with interest and payments. So let's just use a common example to make the point. If that $14,000 is a second loan at something like 8% over 30 years, that's about $100 a month. Sounds small, but over time, you could easily pay back tens of thousands of dollars on top of the original amount. So the no down payment headline, that can come with a real long-term price tag depending on the program. Now, here's the second thing that nobody showed you, and this one's even bigger than number one. Hidden cost number two is going to be mortgage insurance. So FHA, they require mortgage insurance, and if you put down less than 10%, which you probably are with this strategy, the annual mortgage insurance typically stays for the life of the loan. Now, the exact FHA mortgage insurance rate, that depends on your loan setup, but for many, the standard FHA purchases today, it's around 0.55% per year of the loan base amount. So on a $400,000 purchase with 3.5% down, you're roughly in the ballpark of $170 to $180 a month. And if you pay that kind of payment for decades, you're talking about tens of thousands of dollars, sometimes even pushing into the $60,000-ish range. So tens of thousands of dollars on top of your mortgage just to insure the lender. Now, let's look at the VA loan on the same $400,000 house. Zero down, no second loan. You're out of pocket for the down payment. It's zero. So VA funding fee for many first-time users with less than 5% down, that's going to be 2.15%. And on a $400,000 home, that's about $8,600. And here's the difference. You pay it once and you can typically roll it into the loan. And mortgage insurance, zero, nothing. No monthly PMI, no lifetime MIP. So when you compare the overall picture, FHA plus down payment assistance, that can stack long-term costs. Then you have the second lien terms plus mortgage insurance. While VA, that is usually a one-time funding fee and no monthly mortgage insurance. But here's where it gets even more important for military families. Because at the end of the day, you're not just buying a house. You're probably going to PCS. So let's just say you're at Fort Carson for 3 years or the Air Force Academy. Then you get orders. What happens to that house? Maybe you sell it. Maybe you keep it as a rental. Either way, with the FHA strategy, you can end up with 2 liens on the property, 2 payoffs, 2 moving parts, less flexibility. And if you keep it as a rental, well, mortgage insurance can eat into that cash flow every single month. But the VA loan, 1 lien, cleaner exit when you sell, no monthly mortgage insurance chewing up rental income, your wealth position at the next duty station, that can look very different. Now, some of you are wondering, should I put down money on a VA loan? And here's when it might make sense. If you put 5% down, your funding fee actually drops to 1.5%. 10% down, now you're down to 1.25. So sometimes the best use of cash isn't a down payment. It's keeping your reserves strong, investing elsewhere, using that cash strategically. And one more big one. If you're receiving VA disability compensation, you may be exempt from the VA funding fee. So check your certificate of eligibility and your award letter before you close. Don't leave that money on the table. Talk to your lender. They'll be able to help you pull that as well. One more thing. Some people hear this and they think, okay, fine. But the FHA strategy, that lets me get in with minimal cash. In the VA, they must be requiring more out of pocket. Not necessarily. VA sellers can cover normal closing costs through credits, and the VA also limits concessions that the seller could give to 4%. So yes, you can often structure a VA purchase with minimal cash out of pocket. The difference is that you're not signing up for extra long-term costs just to do it. Zero down, no monthly mortgage insurance, and often seller credits, they can help with closing. That's the VA advantage. All right, if you've made it this far, here's what I want you to do. Click the link in the description and start your PCS transition checkpoints. It's 8 to 10 questions that help you see what decisions are actually in front of you. Then book a transition strategy call right after that. We'll go through your numbers, map out the PCS strategy, and if you're moving out of state or even within the state, it doesn't matter. I will connect you with a values-aligned agent wherever you are going. That's what transition checkpoints, what it's all about. Planning with purpose, getting connected to the right team to set you up for success. I'm Weldon Hobbs. I'm a veteran transition strategist. And remember, good decisions start with good information. And I'll see you in the next one.